Welcome to the latest Motley Fool scoreboard. I'm on in Chocoballoon. We've got longtime fools Tyler Crow and Matt Frankel giving a 1 to 10 rating to a top 200 Moneyball database stock. It's homebuilder PulteGroup, ticker symbol PHM. Talk about the strength of Pulte's business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Matt's at a 7. Tyler, you're a little lower at a 6.
Yeah, I want to score it higher. Like I'm begging to do it, but I have to acknowledge that I do bias for this industry, and that a lot of other investors may be less comfortable with the cyclical nature of home building that I'm more comfortable with. I think that there is a need for more homes, and a decent portion of the publicly traded home builders are quite profitable in businesses. Pulte has been one of the better operators, and not because of any one thing, like their underwriting, demographics, balance sheet, or anything in particular. It's just that they're like a solid B+, A- on all aspects of home building.
Tyler just made the best case for an 8 and then didn't give them an 8. So I would give them a 7. I think, as Tyler mentioned, home building does have some major long-term tailwinds, a lot of near-term uncertainty. That's very fair to say. Margins are great throughout the home building space in general right now. Home prices have generally risen faster than building costs, and it's led to a pretty high margin environment in most of the United States. The business, it's an excellent backlog, strong cash flow. They're buying back stock pretty aggressively. Home building is a very competitive space, and it is cyclical, which is why I couldn't score it higher. But this is a home builder that really has stood the test of time.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 8s this time, Tyler.
Yeah, look, follow the incentives. You guys can eye roll as much as you want. I can see you off camera doing it, but it's my shtick. So I don't think it's a surprise that management's performance bonuses at Pulte are tied to margins and return on equity, because Pulte has some of the best margins in the industry and has a really high return on equity. So what a shock. CEO Ryan Marshall has been with the company for over 2 decades, and he came up through the ranks as a sales associate and all the other stuff. So at this point, he's seen his fair share of housing market cycles. So I think he's going to be pretty good at adapting to whatever the market throws at him.
Yeah, and I also gave it an 8, and I'd just add to what Tyler just said. Ryan Marshall, he's been CEO for 9 years now. In that time, Pulte's delivered a 534% total return, and that's a 9-year period that's included some pretty difficult housing environments, including the pandemic. So that's impressive enough. And beyond him, it's a deep bench, several long-tenured leaders. Their CEO's been there for over 2 decades, or CFO rather, over 2 decades. So impressive group.
For financials, a 10 is a fortress, a 1 is yikes. Matt's at an 8. Tyler, you're at a 9.
Yeah, look, 9, but again, we're grading on a curve here because this is home building. It's not software. It's not anything else. It's a capital-intense industry. So it has debt. But 14% debt to capital is very low for anyone in home building industry. It also does a good job of striking a balance between reinvesting in new lots and land and returning capital via dividends and buybacks. Its share count is down 44% over the past decade.
Yeah, I gave it an 8, 1 point lower than Tyler. They do have low leverage for a home builder. He's absolutely right with the buybacks and capital return, great capital allocation. The tough home building environment of the past couple of years has led to a negative growth rate in the business in recent quarters. And that's why I just gave it a point lower, just because, negative growth, I can't really justify giving it much more than an 8. But very, very solid financials.
All right, let's see what you can justify on the valuation, Matt. How well will Pulte's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
10 to 15%, I said, with a safety score of 6. I think most home builders are going to have double-digit returns over the next 5 years. The next year, I'm not so sure about. Mortgage rates could have somewhat of a delayed fuse. They tend to track longer-term interest rates, not what the Fed's doing. But even a percentage point lower would bring a lot of first-time home buyers into the market. That's about a third of Pulte's business. And in a lot of markets, including mine, it's cheaper to buy a new home right now than an existing one.
I went 10 to 15 as well, but I put a safety score of 3. And I certainly feel better about a 5-year prediction than instead of a 1 to 2 year. Because like Matt said, I think the short term could be quite challenging for this industry. Even if we saw rate cuts, things like unemployment ticking up can be a significant factor that puts pressure on home buying. So it's not just rate cuts that it's going to drive the market cycle here. Over the long haul, though, I think management will figure out how to make the best of any operating environment and return value to shareholders in the most appropriate way.
Thanks both Tyler and to Matt. They've given Pulte a solid overall score of 7.0 out of 10. But for Toppets, Matt prefers Dreamfinders Homes, and Tyler prefers Green Brick Partners. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Broadridge Financial Solutions. Till then, Fool on.
It's fine. Tyler doesn't like it either way.
Yeah, it's probably true.
You can just change it to hot garbage.
Let me just do that one really quickly again.